This Sunday will mark Donald Trump's first year as president, and all week long, Bloomberg will be taking stock of a tumultuous 12 months, looking forward to the administration's top challenges, including what is at hand right now. Can they get this deal done to avoid a government shutdown? Joining us now via Skype from Washington is Peterson Institute for International Economics senior fellow Jacob Kirkegaard. Before joining the Institute, he worked with the Danish Ministry of Defense, the United Nations in Iraq, and also in the private financial sector. So, Jacob, first, let's talk about the government shutdown. You know, we had a guest in the last hour who said he gives it a 40% chance we're going to see the government shut down. What do you give it?
I mean, I think it's basically 50-50. I mean, we're in the blame game right now. Whoever thinks they can, blame it on the other party will go for their position. But the fundamental reality is that if you're Chuck Schumer, the Democratic leader in the Senate, you have a tough decision. Do you antagonize potential swing state voters in the upcoming election, or do you antagonize your energized Democratic base?
It is a very, very tough position, and I have a feeling this is going to go down straight to the wire, Jacob. But look, even if we get a shutdown, even if it looks messy, do you think it's enough to derail the economy?
No, I don't think so, because I think no matter what happens, a shutdown will be very brief. And then after that, in the worst case scenario, we'll have another short-term spending bill, 2 or 3 weeks to negotiate a likely compromise on the immigration issue once all the rhetoric from President Trump is a little bit out of the system and we can get down to business in Congress. So no, this will not be enough to sway the economy.
And speaking about the economy, Jacob, I was reading through some of the notes that you sent us. It's interesting. It does sound like you're expecting some pretty robust growth here in the U.S., but not much of it owing to Trump. You think Trump is kind of lucky here with the U.S. economy?
Yeah, I mean, look, Donald Trump got lucky on the timing of the global cycle. He took off right as the U.S. domestically was exiting, if you like, the fallout from the Great Recession. And at the same time, he took office as the most synchronized global upturn for a number of decades took place. I mean, right now, I believe the latest number, there are 2 countries in the world that are in recession, South Sudan and Venezuela. That's a good time to be president.
Yeah, it certainly is. Jacob, it's interesting. We heard from China's Dagon credit rating that just downgraded its rating on U.S. debt. I mean, they're citing deteriorating U.S. debt repayment sources that would be further pressured by these tax cuts that just passed in the U.S., despite the fact that we heard just days ago that China denied these reports that they were slowing or halting their Treasury holdings. Is there a reason to be concerned about this downgrade?
Well, I mean, I think you could say that it's, it gives the Chinese government plausible deniability. But if we move forward and the tax cuts do not have the good economic effects that the Republicans say they will, and all they deliver are very large deficits once again, well, then certainly the Chinese government have a good case, in my opinion, to scale back their purchases, and they will now have their own credit rating to back that up.
So is this something that Moody's and S&P would follow through on? I mean, are you kind of siding with China on this front here, that these political deficiencies could make it harder for the U.S. to service its debt?
Well, I mean, basically I am, because I mean, I think in the long run, if you look at credible deficit projections, unless we get a significant boost to growth, we could be looking at $1 trillion deficits starting in 2019 and on current law lasting as long as the eye can see. And basically without the possibility of, if you believe that bipartisanship in Congress and a big compromise on fiscal issues is impossible, yeah, I believe you have every reason to be concerned in the medium to long run.
Jacob, I want to bring it back here to the U.S. and to talk about the economy, in particular in light of the Fed. You note that, even if we see a hotter economy, and even if there are chances that inflation might run hotter than what our estimates, which are what some economists are saying, you don't think the Fed should raise rates faster?
No, I mean, I basically take the view that this is a good time. Again, Trump is lucky. This is a good time for the Fed to run the economy a little hot, if you like, allow an overshoot of inflation, hopefully see solid wage increases to lure more people back into the labor force. Because that's really the long-term structural problem that the U.S. continues to have. Labor force participation is too low. And we need a number of years of solid wage growth to hopefully reverse that. So I believe the Federal Reserve should enable that. And quite frankly, I think this would be something that the Trump White House would appreciate and therefore be more likely to continue to appoint new members of the FOMC that are sort of fairly mainstream, like Jay Powell, like a Rand Quayle. So, I think it serves the Fed both economically and politically to do so.